We'll give folks just one more minute. There are a handful more folks arriving. Okay, I think we'll get going here. Big welcome to everyone. My name is Kent Ford. I'm the host today for Green Business Roundtable. Delighted you're here. We're on schedule. We've got great presentation today. It'll be about 40 minutes with author and renowned speaker Michael Shuman. Following that, we'll have time for a few question and answer, short little question and answer period. And then I know we have a handful of announcements, but if anyone else has an announcement, please send me a message. And then at the very end, the last 5 minutes, we'll have an optional small group discussion to wrap up. And we invite you to stick around and sort of like as though luncheon ended, you can get up and say hello to a few folks next to you. So I want to get going with the Green Business Roundtable. We're a platform to inspire, educate, improve, and network the business community on sustainability issues. And our parent organization is San Juan Citizens Alliance, and there are too many Z's in citizens. Parent organization, San Juan Citizens Alliance, and they provide logistical support. So I encourage you to give locally and become a member. And San Juan Citizens Alliance is our local leader for clean energy work, clean air, clean water, and protected areas. But we're all here for our guest speaker today. He's nationally renowned economist, Michael Shuman. He's the author of Put Your Money Where Your Life Is. You can see his book there to the right. He's an appreciated economist, attorney, author, and entrepreneur, and a leading visionary on community economics. He's director of local economy programs for Neighborhood Associates Corporation, adjunct professor at Bard Business School in New York City. He's credited with being one of the architects of the 2012 Jobs Act and dozens of state laws overhauling securities regulation of crowdfunding. So it's going to be fabulous to listen to him. Do want to mention Maria's Bookshop here in Durango has his book available on their shelves now. So Michael, welcome. Can we hear you?
Thank you very much for that kind introduction. And I am going to share my screen. So just give me a second. And
looks good.
Can you see it? Forward better with local investing.
Looks good.
27 ways Durango can revitalize its post-COVID economy. So it's the only thing better than talking to you today this way would be to talk to you in person. And I regret that, but this is the necessity of the time. And of course, the times have brought a lot of challenges to local economies. What we can say with confidence is that COVID has weakened a very significant number of small and local business, and many of them will go out of business. Even those that come back, some of them will be substantially weaker. And at the same time, our tax bases, having been decimated as well by COVID, are going to be less able to come to the assistance of these businesses. So we're sort of caught in a vice right now that it's hard to imagine exactly the way out of it. But I do think that there are some encouraging things that have happened in this pandemic. And I'll just mention a couple of them. I mean, one is that more and more of us have learned how to work at home and to integrate our home and our work lives in a harmonious fashion. That probably is a pretty good model for the future. And one consequence of that is that we have way lowered our carbon footprints. and shown that the world can continue as we know it with lower carbon footprints. We've also come to appreciate the local businesses in our midst a lot more. Public surveys show that people are more deeply appreciative of local businesses trying to ally themselves more directly, prevent more of them from going out of business. There's also an understanding in economic development that we need to start paying attention to issues of resilience. Now, this means many things around the country, but sooner or later, economic developers are going to have to come to the conclusion that the fundamental template that they've used for 200 years, namely David Ricardo's comparative advantage, which says that any community should find one thing that's world class, export that, and import everything else, is a catastrophic framework for economic development. And I think all of us are appreciating that we need to diversify our economies, particularly around basics like food and energy, water, and so forth. And I would argue that another impact of COVID is an appreciation that smaller towns like Durango actually are going to be the most dynamic places of the future, because you have many of the features of bigger cities without all of the pathologies that are associated with them. And people can come to Durango for their lifestyle, and then with their internets do almost anything imaginable economically. But to do this requires capital. And as I laid out, COVID has put us in a terrible jam on how to deal with the capital needs of business. Local businesses, especially those that exist right now, desperately need capital infusions if they are to survive, and frankly, if our local economies are to survive. And if we were in person with one another, I would ask you a series of questions. We can't quite do this, so I'll just tell you that normally I ask 3 questions. The first question is, how many of you have mindfully bought something locally over the last week or two? And most hands go up. And then I ask, how many of you do your banking at a local bank or credit union? And maybe half the hands go up. And then I ask, okay, let's give you a little bit of information about local businesses. Local businesses comprise typically 60 to 80% of a given economy. They're highly profitable, highly competitive. How many of you have at least 1% of your savings in locally owned businesses? And all the hands go down. And what this shows is that our patterns of investing, our patterns of savings, are basically to overinvest in the Fortune 500 companies we are skeptical of, and underinvest, and frankly not invest at all, in the local businesses we know are essential for our well-being. We have within our power the ability to fix this. And if we did fix this, the results would be incredible. Americans have $56 trillion in long-term savings in stocks, bonds, mutual funds, pension funds, and insurance funds. And if we were to move, say, 60% of that money into the 60% of the economy that's locally owned, where it really belongs, that would work out to about $1,000 per capita. So take the population of Durango or wherever you're logging in from today, multiply by 100,000, and that is the potential benefit of developing a good local investment ecosystem. What do I mean when we talk about local investments? Well, I want to talk about 12 different kinds of local investments. And one way of introducing this topic is to think about rates of return. So if you listen to AM radio and all of these syndicated programs about stock market investing, they will tell you if you leave your money in the stock market long term, you're going to get 10, 15, 20% rate of return. These numbers are all made up. And in point of fact, if you were to look at the website of this guy, Robert Shiller is a Nobel Prize winner at Yale in economics. He has data every month since the S&P index was established. He has inflation rates, dividend rates, and you can see that currently the stock market is doing about 8% per year. Now this is at the all-time high of the stock market. And if you were to actually take into account what is a more typical kind of return you're going to get in the stock market, what are the transaction costs, what are the taxes, none of us times are coming in and out of the stock market perfectly. Getting about 5% is a good target. And that is the target that I'm going to suggest local businesses should try to get. So most of the ideas that I'm going to share with you actually can get 5% rate of return or better. The first investment option I want you to think about is investing in yourself. Anyone with credit card debt should be investing to get out of credit card debt, because the fees and interest that you're paying is north of 20% per month, right? So 20% per year annualized. So if you think about it, you know, a Wall Street investment will get you 5%, but getting yourself out of credit card debt will get you 20%. So this is the obvious place to start investing. And if you're out of debt, what about the people in your family? What about your kids? What about your neighbors? When I was deeply in debt, I turned to friends and was able to crowdfund my way out of debt to pay them back at 5% rather than credit card companies at 20%. And it became a great local investment for them and a great local investment for me. Number 3 is your home. In almost all assumptions, investing in becoming a homeowner with the right size home, not too large, is going to generate over your lifetime a much better return than Wall Street. And there's a bunch of reasons why. First of all, there is the mortgage interest deduction on your taxes. That's a huge subsidy the government gives you. The second is all the benefits of avoiding rent. The third is at the end of owning your IRA or 401k, you have to pay taxes on it when you take money out of that. At the end of owning your home, you get up to $250,000 tax-free of gain, or if you're a couple, $500,000 of gain. So it is much, much better as an investment to go into your own home. Now, suppose you are a homeowner. The next best thing is to pay down your mortgage faster. You will get a better return on that money than going into Wall Street. Now, suppose you've paid off all your debts, your kids have their debts all paid off, you own your home free and clear, maybe even have a second home free and clear. You bought a home for your kids free and clear. What else could you do with your money? Well, you can start looking at other things in your bills. So for example, energy. If you have $1,000, should you put that in your IRA or should you put that into improving your energy efficiency? Now, here's the thing. When you put $1,000 into your house for energy efficiency, it may or may not increase the value of your home by $1,000. So we have to assume that probably it won't, just to be on the safe side. And instead, we're going to demand that over some number of years you're going to be in the home, let's assume 10 years, this thing is going to have to pay for itself. So if you do the math on this, what you need as a rate of return on an investment like this over, say, 10 years is going to be 16% per year to do equal or better than Wall Street. So can you do 16% per year? Well, it turns out that, yeah, $1,000 in your own energy efficiency, generating $160 of savings in your electricity bill, your heating bill, that is easy. In fact, you probably can do much better than that. You could put $1,000 in a greenhouse and easily grow $160 worth of fruits and vegetables each year. You could put $1,000 into a bicycle and avoid $160 worth of gasoline expenditures, probably per month, honestly. You could put $1,000 into a world-class espresso machine, and if you avoided one Starbucks coffee per week, you would be beating the 16% rate of return. If you put $1,000 into your own education, could you improve your income by $160 per year? And yeah, really easy. And this is why even investment guru Warren Buffett says the best investment you possibly can make is in your own education. So, okay, let's suppose you've taken advantage of all of these kinds of investments. What else is available for you out there? Well, one is you can invest in your co-op. So this is the Weaver Street Co-op in Research Triangle, North Carolina. They needed to build a new store. They needed $1 million to build it. They borrowed it from their members and decided to pay their members between 5 and 8% per year, depending on how long they parked their money. So co-ops for years have actually been delivering very good rates of return on their capital expansion projects. Then we get to businesses, local businesses. So this is a picture of a mercantile called the Quimper Mercantile in Port Townsend, Washington. Port Townsend is a small town north of Seattle, a couple hours drive. They decided to create a store where people could buy their socks and underwear locally. They needed $500,000 to build it. They were able to sell shares in the store like Girl Scout cookies. And in every year of its operation, at least until the COVID year, they have done better than break even. Because guess what? When you own shares in a store like this is where you're going to do shopping. And you're also going to market to your friends and neighbors to do your shopping there. Now, Quimper Mercantile represented an old form of issuing securities. And under the old laws, it was kind of expensive for most businesses to do legal paperwork to get even a penny from a grassroots investor. And then in 2012, a lot of us pushed for this. This guy, some of us remember him, President Obama, signed something called the Jobs Act, the Jumpstart Our Businesses Act. And this made it cheaper and easier for small businesses to raise capital from grassroots individuals on federally licensed investment crowdfunding portals. And the basic rules of the game were any individual could invest up to $2,200 per year. Any company could raise up to $1.07 million per year. And since then, I mean, the record is remarkable. It took 4 years of regulatory hurdles for the Jobs Act finally to be implemented in 2016. But today, we now can account for about 700,000 Americans participating in investment crowdfunding. They have put over $500 million into several thousand US businesses. The average raise by a business is about $300,000. The average investment by individuals participating is about $800. And the most successful entrepreneurs have been women and people of color, precisely those people that the conventional mainstream capital markets are currently tilted against. Now, you don't only have to, you don't only have to be a for-profit to raise capital through crowdfunding. You can also be a nonprofit. So this, for example, is Bellwether Housing. It's a nonprofit affordable housing company in Seattle that is using crowdfunding to help support its efforts for affordable housing. But, honestly, we could approach any of our nonprofits, our favorite nonprofits, and say, hey, look, I'm going to bet that rent is a big part of your annual expenses. Why don't we, the members, buy the building? Each of us hold a few bricks. And by us holding the building, we're going to greatly reduce your cost of operation. In the meantime, we have an asset that then is appreciating. That is a really cool way that we can support nonprofits. Number 9 is local real estate. And if you are clever, you will find a federally licensed portal called Small Change, which specializes in mission-oriented real estate projects, affordable housing, smart growth, mixed use, transit hubs, you name it, you'll find all kinds of cool stuff on Small Change. And if you're doing a real estate project in Durango, using this kind of crowdfunding is a great way of doing it. Now, I should say that there have been some changes in the SEC law. And in the first week of November, while everyone was focused on an election, the SEC actually updated its laws, and now the ceiling for grassroots investment, the ceiling for a company is not 1.07 million, it's 5 million. So now all kinds of real estate projects can be opened up to grassroots investment. Number 10 is investing in your city. So for a couple of years, a wonderful website called Neighborly enabled small cities like a Durango to issue municipal bonds in smaller denominations that grassroots people in the city could buy. So, from a city standpoint, you want to start a zoo, you could do it with tax dollars, or you could issue zoo bonds to the people in the community who were especially excited about zoos. Now, it turns out Neighborly no longer exists, long story, but there is nothing that prohibits a city from deciding it's going to issue municipal bonds in different denominations and make them available for local purchase and use that as a way of financing things during difficult periods like COVID recovery. Number 11 is creating community funds. So truth is, most of us don't have the time and the bandwidth to look for companies one at a time. We prefer to have a fund where the manager has already vetted a bunch of companies, created a portfolio, diversified the risk. There's something like 10,000 investment funds in the United States, but there's only about 20 of them that are focused on local companies and open to grassroots investors. So this is one, ECDI, run by a nonprofit in Columbus, Ohio. They have a dozen revolving loan funds for small businesses. One of them is open to grassroots investors. And I'll have more to say about this in a couple of minutes. Finally, if you can't figure out any other place to park your money, if you want to be a local investor, but you don't have any good options so far, you can just park it in your local bank or credit union. Now, here's something to think about. The probability of $1 being put on deposit in a local bank or credit union, then going into a local business, is 3 times greater than the probability of $1 going into Bank of America or PNC going into a local business. So this is why local banks and credit unions are so important. They are the most significant part of the banking establishment helping the local economy. Now, I want to talk about what you can do to be a part of the creation of a local investment ecosystem in Durango. And I'm going to give you 27 ideas in sort of rapid succession. I will happily share my slides later on, so you folks don't need to write this down furiously. But the big picture is this: a successful local investment ecosystem needs a good pipeline to create local businesses that are ready for local investment. You need a good inventory of investment tools in your community that people are aware of. You need a good network of investors who are going to use those tools. And then you need legal intermediaries that bring those investors and businesses together. You also need a supportive local government, and there's lots of things local government could do to support this ecosystem. And I'm going to add to my list a couple of wishes about changes in national law that would have a price tag of 0, but would make a huge difference in the local investment ecosystem. So 5 actions you can take to strengthen your local business pipeline. Well, and you're doing many of these things already in Durango, but maybe it's worth just, going through the checklist and asking, how can we improve this? Are we delivering the right amounts of technical assistance to small businesses at just the right time in just the right way? Do we have a network of mentors that connects older, more experienced business people with younger business people? Do we have incubators, maker spaces, fab labs, workspaces that put people together and help entrepreneurs support one another? Are we creating peer groups? Maybe they're sector specific. So we have peer groups of food businesses in Durango and peer groups of manufacturers, so they're supporting one another. And are you doing leakage analysis to help identify what are the market opportunities for new and expanded local businesses? Leakage analysis turns out to be not so difficult to do, but very few communities have done it. I'll just give you an example of a kind of leakage analysis that I recently did for a tribe in northern Montana called Fort Belknap. And I analyzed, this tribe, it had 70 cents of every dollar that it spends in Fort Belknap leaves the reservation. And we calculated that if we could just plug 10% of that leakage with new local businesses, we could create, hundreds of new jobs for this Native American reservation. And the jobs would be in areas like local food, professional services, local finance and retail. But it's important to get this information so we know that we're nudging local businesses in the right direction with expansions. What are 4 actions we can take to expand your local investment tool chest? Well, we can create an inventory, a public inventory of every existing option. So I'm guessing something like this probably exists in Durango already. It has things like angel investors and venture investors and banks that are out there. But the truth is the probability of any of those things helping a local business are really remote. So you have to start including local investment options in this mix, crowdfunding options. Another thing you might want to do is help businesses think about new ways of organizing their ownership. So businesses that have employee stock ownership plans or worker ownership or co-op ownership, these are ways of localizing ownership that even existing businesses should be encouraged to look at. We need to help build up the crowdfunding capacity. It's one thing to wish that more companies took advantage of crowdfunding, but they actually need to be educated about the process and shown the way. Another thing that you might think about doing is creating a network of funders in your community that evaluated companies in a more rational way. I mean, if you think about it, so I have a daughter, senior in high school, who is now applying to colleges. When I applied to colleges 40 years ago, I had to type every damn application. Now they have a common application. Great innovation. We need a common application for businesses looking for capital in your community so that all of the banks and other funders together can sort of figure out who's funding what without running you around the mill 100 times. Here are 4 actions for strengthening investor networks. And honestly, this is sort of the forgotten part of local investing, is organizing local investors. So one thing we need is grassroots champions. Who are the people in your community who can lead other grassroots investors? You have a good slow money chapter. That's a starting place. Who else is out there and interested? What kind of investor resources do you have online for grassroots people who want to do investment? Do you have registered investment advisors who are interested in local investment? My friend Angela Barbash in Ypsilanti, Michigan, has organized other registered investment advisors as a network in Michigan to promote local investment. And then, do you have a pre-purchasing network? So when the pandemic first hit, I decided, you know what? I need to rescue a local business. That is a moral obligation on all of us. I can't help all of them, but maybe I can help at least one. So I decided to write a check for $1,000 to this guy, Andy Shalal. Andy Shalal is the proprietor of Busboys and Poets, my favorite restaurant in DC. It's also a bookstore and an event space. And I said, Andy, you know, I'm prepaying for $1,000 of goods and services. Hopefully this will help you through with difficult cash flow, maybe hold on to another employee into, and I'll encourage other people I know to do the same thing. Well, he was so pleased, he gave me gift cards, not of $1,000, but of $1,200. So I got a 20% rate of return on my investment. Now, just my one act can't help businesses on their own, but you folks are the only city in the country that has set up a website called Local Futures, which invites other businesses like Andy Shalal's to come online and do exactly what I did, only with thousands of people in and around Durango. Learn about this site, use this site, make it a home run success. What about intermediaries? Here are 5 actions you might think about. So one action is just having a regular meeting. In Port Townsend, again, this small city of 10,000 people north of Seattle, they created in 2007 something called LION, the Local Investment Opportunity Network. And LION is basically a potluck where they bring together local businesses and local investors, and they ply them with free food and alcohol. And out of this, they build relationships. What many people forget is that at the end of the day, local investment is really largely about relationships. And just this simple act of relationship building has resulted in about $800,000 of local investment per year since 2007 in a town of 10,000 people. Now, we can also do this online. And one of the things that happened in the SEC reforms last November is they have a testing the waters provision that will soon allow websites to facilitate conversations between small businesses and small investors without violating a whole bunch of security limitations. You could also create a local listing of all of the businesses in Durango that are currently listed on the federally licensed crowdfunding portals. So this is a website that a friend and I put up around Baltimore called the Maryland Neighborhood Exchange. Honestly, it's a pretty awful website, But just this awful website where we list a bunch of companies in Baltimore, most of them run by African-American entrepreneurs. When we list these businesses that are listed on federal portals, Baltimore investors know to come to us to see where they should go to do local investing. This lousy little website has helped to facilitate $200,000 worth of local investment last year in 20 Baltimore companies. You need something like this in Durango, and the cost of setting this up is about 50 cents. What about setting up your own community investment fund? So about a year ago, I wrote a handbook with 3 other people called Community Investment Funds, a how-to guide for building local wealth, equity, and justice. And I invite you folks to download it. It's for free on the website of the National Coalition for Community Capital. And you can see a bunch of different models that you can use to create your own Durango investment fund. We also need to create trust companies. And the subject of my most recent book is how to use self-directed IRAs and solo 401ks for local investing. These are tools that have been around for a long time, but people aren't aware of them. And these tools enable you to sort of break out of the limitations of your vanilla flavored IRAs and 401ks and begin to do local investing. And trust companies can help to facilitate this in your community. What about local government actions? What could the Durango City Council or the La Plata County Council do to help you? Well, one thing is they could set up municipal funds. They could set up a fund that was administered by the city or administered by the county to support, say, affordable housing or local businesses, and then invite private investors, grassroots investors, to put money into the fund. They should be thinking about public banking. And by public banking, I don't mean opening up all banks and services, but if you look at the Bank of North Dakota, which has been a very successful public bank for a century, one of the things they do is when money comes in, whether transfer funds from the federal government or taxpayer money locally, they hold that money in sort of banking deposits until they need to spend it. Well, those banking deposits are usually made in Bank of America, which means it never touches your community. But if you insist with your local government to put that money on deposit in local banks or credit unions, you can greatly enhance local businesses. And if you want good models to see how cities of considerable size have done this, look to Tucson and Phoenix in Arizona. We also need for cities to give public employees a local investment option. Maybe it's to invest in some kind of diversified portfolio of local municipal bonds. And then we should create municipal tax credits. So this picture here is of a telegenic 30-something premier of New Brunswick named Brian Gallant, who helped to enact a couple of years back in New Brunswick a tax credit for local investment. Every time you invest locally, you get $1, you get 50 cents off of your taxes. How great is that? That, by the way, has inspired 2 right-wing Republicans in Michigan to push for similar legislation there. But it doesn't have to be done at a state level. It also could be done at a local level to the extent that you have any control over taxes. Give some credit for those who do local investment. Finally, there are big issues that we should be lobbying for at the federal government level. We should reform our Investment Company Act to allow neighborhoods to create their own pension funds. This woman here is in Nova Scotia, Canada. And in Nova Scotia, they enacted a Community Reinvestment Fund Act in 1998, and now there are 70 of these funds. Her fund focuses on local food businesses and farming. We need to amend our Exchanges Act in order to permit local stock markets. We need to amend ERISA to allow people to move money from their 401ks that are often stuck for the duration of their employment in non-local investment options, and to move them into solo 401ks so that they can do some local investment. And finally, we need to reform banking laws so that local banks can be partners as we go down this local investment road. The last thing that I want to say is that if you're interested in all of this stuff, I just rattled off a whole ton of material at you in 40 minutes. You need more time to absorb all of this, and I am now teaching classes. There's sort of 4 classes that I'm teaching in March for an hour and a half, and then there are 15 videos that the classes have with that, and I encourage you to sign up for these classes, and I'll be doing other ones in later months as well. But the classes have videos that help to instruct investors, businesses, investment organizers, and if you're interested in this, an easy thing for you to do is just go to my website, michaelschuman.com, sign up there to receive the newsletter, and you'll get more details about the classes in the coming weeks. I am going to stop there, and maybe we can take a couple of questions.
Excellent, Michael. Thank you so much. Appreciate it. Let's see. Down at the bottom of your screen under reactions, you can raise your hand, or if anyone has a question, jump on in there. You'll have to unmute yourself first. Anyone? Okay, I see Ellen Stein. Go ahead.
Hi, thanks, Michael. That was fascinating. It's so great to have the GBR back in action. I'm curious, for a community like Durango that is so sales tax dependent, if you have a couple strategies that you would recommend we should be pursuing of all those you mentioned that stand out as a priority.
Yeah, so I don't have easy fixes for the problems and dysfunctions that our current tax system lays out. I mean, in my fantasy world, we should be abolishing all taxes, sales, property, and income, and replacing it with green taxes on energy, materials use, and pollution. And but we're not there yet. So, but I just admit to the futility of tweaking a tax system here and there and expecting to fix it. But here's the thing: the sales tax dependency shouldn't get in the way of almost all the activities that I mentioned. We'd have to look creatively at some of the other taxes you have about how we could maybe create some tax credits, and I have to see where jurisdiction flies. But I would just think about, maybe even working at the state level to enact a different kind of tax credit that could favor folks throughout the state on local investment.
Thank you.
Gordon Glass, you're up next. You need to unmute yourself there.
Okay. Thank you for your presentation. My question is whether you are familiar at all with green banks, or could point me in the direction of how green banks are formed to help underwrite maybe lower income renewable energy support and projects.
Yeah, so green banks, my understanding is that they mean many different things across the country. So we have a green bank where I live in Montgomery County, Maryland, pretty recently set up, and they help with energy and energy efficiency projects, water efficiency projects. They put some capital in there. But interestingly, they're not set up to accept grassroots investment, which is a tremendous defect. And we should rethink these green banks as types of municipal investment funds that are administered by the municipality or the county, but bring in lots of different kinds of capital, some from accredited investors, some from grassroots investors, some from local banks looking for CRA credit. So, you know, and I think then these banks will become more interesting. And I would like to see, you know, these kinds of funds / banks involved with affordable housing and with expansion of municipal energy projects and perhaps, you know, downtown development. There's a lot of folks that I've been talking to recently that are really excited that in Portland, Oregon, a nonprofit called Mercy Corps enabled a neighborhood to buy out a local shopping center, the real estate there. What about creating more parts of downtown Durango that are purchasable by people in Durango as a way of stabilizing that property? And it seems like a green bank that was properly focused could enable you to do that.
Super. Let's see, there was a chat question from Gary Hedgecock. The example you showed on the tax credit 2 slides back, can you revisit just the?
Yeah, this was about the New Brunswick
right.
tax credit.
Could you elaborate on that just a little bit about where it was and who set it
Yeah,
up?
so this was enacted about 3 or 4 years ago. And if you just Google local tax credit and New Brunswick, you'll come up with the details about it. But I think the details are that the tax credit, you have to invest at least $1,000 for the tax credit to kick in. And there's, you know, a somewhat carefully defined class of local investments that needs to go into. And then there's a ceiling. I think it might be at a couple $100,000. So, you know, all of these tax credits have fine print rules around them. And the cool thing is you can just design it as you see fit.
Great. Werner, short question and that'll wrap it up. We have a couple announcements.
Actually, Linda was ahead of me.
I've got a slide ready
Okay.
for Linda and Slow Money.
Okay, very briefly, your slideshow is available. That's my understanding, Michael.
I will send it to
Okay.
our colleagues as soon as we are done.
Is that also available with your voice on it? Because it's so much more convincing if I would forward that.
Well, I'm looking at this Zoom and seeing that someone is recording this. So presumably that will be available.
Yes, we'll have it available at San Juan Citizens Alliance.
Okay, thanks.
And we normally make those available. Let's see. I'm trying to share a screen here, but it doesn't look like it's happening yet. Let's give a big thank you to Michael Shuman and a reminder that his book right here is available at Maria's Bookshop right here in town. I encourage you to go and get that. Let's see, we did a few questions. Four Corners Slow Money, Linda, you have a question, I think.
Yes, hi, Michael. Thank you, Kent and Werner. So I'm part of the steering committee of the Four Corners Slow Money. We're one of the newer nonprofits in our area, and we want to invite everybody to our online meeting February 28th, which will happen from 4 to 6 p.m. It's a Sunday. And what we're about is regenerative philanthropy through that. I always get stuck on that word, but 0% interest peer-to-peer loans. So far in our very short 1.5 years, we have loaned out $33,000 to 6 different firms. And we're really, really pleased with the results. For instance, Fields to Plate has borrowed $10,000 for growing seed. And they managed to cultivate 4 more acres of vegetables last year, which is now brings them up to 10 acres. And alone in carrots, they produce 42,000 pounds of carrots. That's just one of their vegetables. So they also have meats and other vegetables. The other farm that I'm super excited to see what they're doing, Adobe House Farm. They borrowed $3,000 for building a year-round greenhouse. That means, which will not use any fuel other than solar power. So what that can do for our local economy is, I am sure you can imagine it. And my question to Michael Shuman was, from your perspective, what is the payback for those that decide to invest in something like growing local food? Because the way I look at it is you plant a seed and there's new wealth, or a new lamb is born and there is new wealth. So, but I don't see it from your end. So would you care to speak to that, even if it's just for a couple of minutes?
Yeah, so this is part of the larger question about what is an appropriate rate of return. And I would return to the 12 options that I gave to folks. And here's where I think we're at. So to the extent that you invest in yourself or the people around you, and I still do consider that local investment, you can get far better rates of return than Wall Street at 5%. To the extent that you start looking at local investment funds or local real estate or co-ops or businesses, you're probably going to get a little bit less than that 5% for now. I mean, over time, I think that number could go up, but because of the immaturity of the marketplace, you might have to settle for more like 3 or 4%. And then, of course, if you leave your money in the bank, you're going to get a trivial rate of interest, but it's protected. I think that even at 3 or 4%, the way that you should think about this is that in addition to getting a private rate of return, when you invest in your community, you also get a social rate of return. That is, when your local investments actually strengthen a business, you're strengthening the tax base, which strengthens your schools and your police and every other form of social service. And that comes back to you as quality of life. So, for me, that 1% loss on my private rate of return to get that additional rate of return locally is worth it. But people have different weights of that. Another thing that I think people are using for local food investments, which seems to be more common and I think helpful, is instead of doing straightforward either loans or equity investments, to do royalty investments. And the idea of a royalty investment is that a business will sort of share in its net profits or its net receipts, depending on how they structure it. And what's good about that is that food businesses, farming, they're very seasonal, they're very up and down, and it's helpful for the company if the payback burden lowers as the rate of return for them goes down. So a lot of slow money groups are using royalty-based loans to food businesses as a way of helping them. So those are my quick thoughts.
Thank you for that. And just very quickly.
Fabulous, Michael, thanks so much. Linda, we need to move on here because we have a couple more announcements, and we do, as you know, keep to a pretty strict schedule. So wait to be called on and unmute yourself. A friendly reminder, ruthlessly brief, 3 or 4 sentences about right. And also a reminder, GBR is nonpartisan. I know we have a couple of folks running for city council who'd like to introduce themselves. Frank Lockwood, welcome, and unmute yourself. And 3 sentences.
Thanks, Kent. This was just, Michael, thank you so much. Fabulous program. And I was about to send a message to everyone. There is so much here. So if I get elected to city council, even if I don't, I think I will take your class and view those videos. So much is applicable to the future of Durango. Thanks.
Thank you, Frank. Lisa Mccoury, welcome, and please turn on your mic. Lisa, going once, twice, okay.
Can you hear me now?
Yeah, there we go.
Okay, great. I apologize. Hi, my name is Lisa Mccoury. I'm running for City Council and wanted to introduce myself. Thank you for including me today. I'll be at all of the upcoming panels and forums in March with my fellow candidates. Grateful to be with you all today. Thank you.
Thanks, Lisa. And finally, Seth Furtney.
Hello, I'm Seth Burney, also running for council with the website sethforcouncil.com. The one thing I'd say to Michael that I think is maybe overlooked is we've also, in addition to just needing local investment, we've got a little bit of an urban-rural divide. We're right in this area where I think there's a separation economically and maybe even psychostructurally that we can help bridge via collaborative investment. And I think that's one additional benefit that you may not have mentioned.
Okay, thank you, Seth. And thanks all of you all for putting yourselves out there to run for City Council. We appreciate it. Upcoming Green Business Roundtables, March 10th, we have Nathan Fay, Director of Colorado Office of Outdoor Recreation Industry, speaking about overcrowding in the outdoors and what's being done statewide. But also on hand will be Brent Charette, the Executive Director of San Juan Mountains Association, as well as Visit Durango and their strategic plan for optimizing visitor experience. So I hope you can join us March 10th. And quick check about time. We wanted to give folks one final chance to just say goodbye to everyone. So we're going to drop you into little rooms of 5, 6, 7 people and say goodbye to 5 or 6, 7 people instead of saying goodbye to 66 of us. So thanks everyone for being here, and we'll see you next month. And just stay around here for a second. You'll meet 5 or 6 friends and just say hi, introduce yourself. You might have to click to